All right. Good morning and welcome back to the Sydney Tokyo overlap for 4th, 5th of March. Good evening for those who are joining from the western side of the world. It's 7 p.m. Eastern now, and a very good morning from those for those who are joining from the eastern side of the world, Japan, Sydney, and India. So let's get started off with the Euro USD daily chart, and we have gotten the first target, almost the first target, which was slated around 586. Remember, we were targeting 586 as the first soft target, and two things have happened overnight. The first target has been met, and the first major resistance on the daily chart has been taken out now around 620 mark. So good news for bulls as they score one more point and prepare themselves for further ascent, further rally, uh, possibly after a pullback. All right. So once again, we want to emphasize that the daily chart indicates clearly that the larger degree trend in Euro USD has turned bullish, and it is not now, but it is since July 2023. Also, in the last 2 years, the corrective wave ABC has formed a bottom finally strongly on the 13th of January. I repeatedly call out this day because that was our aggressive long call for the first time, and since that particular day and the price at 1.0177, we haven't seen a decline. All right. So five waves up followed by three waves down is the basic principle of elite waves, indicating that we've got enough evidence and proof to start believing that we are euro is moving or headed towards five-wave rally on the north side of the same degree. On the 4-hour chart, we've kind of removed the smaller degrees, but what we see right now on the chart here is another five wave at a lower degree. You can see that. I would say it is at the minute, or whether it is minute or sub-minute, it's completing five waves. This is a motive structure. It's not an impulse, but it's definitely a motive. It looks like a motive structure. Leading diagonal, and we have got a throw over. All right. Now, whether or not this is complete, because another important point or aspect which we need to consider is a major resistance has been taken out. All right. So ideally, when resistance of such a magnitude or time frame is taken out, it calls for a pullback. Similarly, if the support of such magnitude is taken out, it calls for a pullback. So if we kind of consider this entire boundary as one, then the pullback could be almost a 61.8% or a retracement of a 61.8% of the entire boundary, which is a couple of hundred points from here, more than that actually, around the 370 or 350 mark. So it would be it. I mean, it cannot be ruled out. But I'm not saying it's mandatory to happen. I'm only saying it is a possibility. So be aware of this possibility, brothers. And as we keep on saying, see, we have issued another take profit in euro in the portal. All right, the long positions that we were holding in euro, maybe one last position. We just booked 155 pips right now before logging in or coming live. So the idea is to keep logging profits, and you never know. Wait, make some room for pullback, and also make some room for additional positions to be taken on the long side. So if you are holding positions more than one, it's good to take partial profits of the desk. Nothing wrong in it. Allow for some room for a retracement or a pullback, and it would be nice to get it on the long side thereafter. You see the RSI continuously or constantly stalling at the 70 mark, but that is not by any means. We are not suggesting that it is the only criteria which suggests there's going to be a decline after decline right now. All right, so let's be prepared for a decline. If it doesn't come, we are already long, so that's not a problem at all. All right, but I'm convinced about the fact that a major resistance has been taken out, so it calls for a pullback and a decent pullback actually. But the overall trend remains firmly bullish. I just need to change this arrow. I think we need to. We were using the path, so let's continue using that path. The resistance has been taken out, and it calls for a pullback, maybe a three-wave decline before the rally continues. All right. So that's the story in the Euro USD. Let's move on to the dollar index, please. See, four major instruments that we always keep track about, and we're always going to trade them. At least four. Actually, it would be six of them or seven of them. They would comprise of Euro USD, dollar index, GBP USD. We might add dollar JPY going forward. Gold, we might add silver going forward. Dow Jones, SPX, and Nasdaq. So that makes around 7 to 9 instrument constant, and we'll look to position ourselves in the coins. So overall, we'll be analyzing 10 to 11 instruments going forward, or at least 9 instruments going forward. All right, and we'll be actively trading them. So we've got enough on our platter in terms of the trading aspect as well. What the dollar index is suggesting is another five-wave decline. Now, this five-wave could be, I mean, on the daily chart, it looks neatly like a leading diagonal, or maybe the third wave is progressing. I tell you what, sir, if the third wave is progressing, and this guy is not going to let it loose anytime sooner, even the Euro USD. The only thing that we'd like to emphasize is the larger degree trend in the dollar index has turned down from 110.20. That was a couple of years high. We were emphatically saying that okay, this is an all-time high or a couple of years high being registered, and you've got to be very careful, and that's the time when the turn normally happens, and we were aggressively short, if you remember. I can give you the date, sir, 13th of Jan. in one of our sessions, first one over here, one of the early sessions that were recorded or published, or we went live. I don't know if the recording is there, but now you can see prices have almost dropped 500, more than 500 points now, and that is a 5% decline. 5% decline in 6 weeks. All right, and this is just the beginning, sir. I would also like to say that okay, we might have just got the first leading diagonal in place. Now, if that is the case, then the all the action could be on the 4-hour time frame. If that's the first leading diagonal, 1, 2, 3, 4, and 5 in place, by all means, we are going to see a retracement or a meaningful pullback of the entire boundary. I mean, I would like to take the retracement as well. Because if that's the case, it's going back to the 61.8% sum towards 108.50. All right, and that could be the next path which could be laid as follows. All right, so be prepared for this. I'm not saying it's going to mandatorily happen, but we need to see a five-wave rally. That the moment a five-wave rally is on cards, we know that bulls are back in business for a while before the bears are in control again. All right, so keeping in mind the larger degree structure down, we also need to be aware that there could be a pullback. And another reason for that is meaningful support has been just taken out around 105.45. All right, sir. And one more thing of our notice is the RSI. You can see the price action dropping lower, the RSI kind of producing a bullish divergence. We've got to be a bit vigilant. I would not use the word careful because the trend is down. We are already on the short side, so there's no problem at all. But just got to be a bit vigilant and not let it loose. Actually, all right. It's only going to give us an opportunity to initiate further shorts if a counter trend rally materializes. So, all right, so GBP USD. And the first price target of GBP USD, I don't know if it's the same provider that we used to do or is it FXCM? Yeah, it's FXCM. So that's so congratulations to us. We just hit the first target, which was determined or drawn, I think, on the 3rd of Feb. So it has taken a month's time, but we are there with the first target. Now, also as we discussed in the euros and the dollar index, it has also taken out a major resistance as possibly a wave 4 of one large degree. We just got to be vigilant here. It's possible that there could be a much deeper correction, all right, of the entire boundary actually, or at least the 61.8% of the entire boundary, which could be quite a quite a bit surprising for many traders. Tell you what, that is just a retracement or a pullback, nothing more than that. All right, it's only going to give us an opportunity to go long again, and then we'll change the degrees if required. But I think that target has been met. It's a good news for us, and you can hold on to few long positions, but it's a good time to take some partial profits. All right, and that is a five-wave rally again, which will materialize. So if it is done correctly, 1, 2, 3, 4, and 5, it calls for a retracement at least. All right, three-wave corrective decline. Maybe not clearly seen on the 4-hour time frame. The diverging scenarios but it's clear on the hourly chart. It's quite clear on the hourly chart. All right. Okay. Next one is gold. Gold, we were sorry. That's another provider that I took. So gold could be could have produced a wave B of a larger degree ABC corrective decline. Now, for us to confirm that a bottom is in place, we need to see a clear impulse wave, which is still not there. Maybe one more high would confirm that an impulse is complete. In that case, we will have to be a bit more vigilant in the corrective wave. We'll have to exit the longs or short, sorry. But right now, if you look at the hourly chart, it has reached the 61.8% retracement, and possibly it has also completed the first wave lower, corrective wave higher. Ideally, it should resume lower from here. All right. And if it does resume lower from here, the first short-term target or the first intraday targets could be seen coming around 2856 down there, possibly 2884 as well. All right. So even if it drops uh, to maybe below 2900, we should be good to. I mean, 2900 is obviously seen here, but anything below that 2884 would also take out wave B, and possibly we will be on our way lower towards 2813, or maybe possibly 2790 and even lower. All right, so that's the story in gold. We are we are holding shorts with we took partial profits anyways in the portal from the short position which was taken around 2920. If you've taken shorts around 2928 or 2930, the intraday high yesterday, you might also want to take some partial profits. All right, and stop loss remains around 2960 for now. The potential targets being pointing towards 2814, 2810 rather. All right. So that is the story in gold. We've got a couple of more views. We took profits in the portal for indices. Let's have a look at what the indices are doing actually. So is it the five wave complete now? I think there is a lot of bullish divergence which is seen here, and I would literally be convinced of the fact that we've got a one, two, three, 4, and 5 complete. And if that's the case, I mean, let's remove this retracement for now at least, and wait for a pullback. I mean, the meaningful pullback. We need to see that coming through very soon now. Or is it still wanting to decline? But I'm seeing charts are indicating quite a bit of diverging scenarios. So that's the only one factor which is quite convincing of a potential pullback underway. And we will wait for a pullback. I think let's take a retracement of the recent drop. I won't be surprised to see prices go back towards 44,100 mark. There's a 61.8% touch as well. That would be wave 2. Uh, if it is a leading diagonal, it would be a wonderful scenario. That could be minute wave degree 1 comes here. We're not worried much about the degree, but at least 5 waves looks complete and a pullback. We'll wait for a pullback towards 44,000 again. Enter on the short side. Just want to have a look at the SPX futures. I think it dropped more than around 100 points yesterday, around 57. So it is certainly an interesting fact if the third wave is progressing. If the third wave is in business, I think we'll have to restructure our trading plan because we are waiting for a pullback now. That is the upper boundary and the lower boundary. I don't know where it is. Okay, it's there. I just need to bring it up to, yeah. So is it going back to 6,000 levels? It's quite possible, sir. All right. But the only question now comes to our minds are, is it a large degree wave 4 being carved out, or is it just, is it wave 1 of a much deeper corrective drop? By all means, it looks like a wave 1 of much deeper corrective decline. Looking at the multiple degree wave 5 complete around 6,200 mark or 6,165. All right. The bitcoins and Solana. Let's see if there is. So it is still taking its own time. Let's wait. We want to see prices 97, 98. Immediately we would go short over there with the stop around 109, above 109. So just hang in there for a while. We don't want to rush into shorts right now. Maybe partial short, maybe a couple of more sessions. I think we might have to initiate, or we might initiate some partial shorts. But that is very much possible, a 61.8% rally. And as the risk assets are posing themselves, specifically the indices, it looks quite possible. All right, so I think there was a last chart which says Nasdaq. Nasdaq, we need to. I think we need to wait for Nasdaq as well as the pullback materializes. That's an ending diagonal, but it's more or less clear that all targets have been met. So that's the first drop, which is looking complete, and it's just a matter of time before markets pull back. We are looking for a right shoulder to be carved and don't need to be in a hurry at all because the action is going to come thereafter. All right, this is the point. I mean, just suggesting the points here. That's the right shoulder we are looking for to hit it hard on the short side, brothers. All right, sir. So let's bring the current session to a pause now. And again, these are the stories. Be watchful for a meaningful pullback. Might be on its way. That's what it's looking like. So we'll be back again to continue the stories we are leaving right now in the London Times. And until the next one, as always, once again, thank you for joining in. And Please do take care and God bless. Goodbye.